Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and the markets are falling, and we've got just the right voice that you want to hear right now. Mr. Shankar Sharma joins in. He's the Vice Chairman and Joint MD at First Global. Welcome, sir, to Business Today TV, and thank you so much for taking the time out. I want to begin by asking you, sir, how are you looking at the current phase of the markets? Already we've seen a very, very sharp fall. Investors losing 5 lakh crore rupees just in today's trading session alone. Are markets really heading into a bear phase?
So, bull and bear markets are part and parcel of investing. And, if indeed we are in some degree of a bear phase ultimately is to be expected. So be very clear that there is no such thing as a one-way market. And many investors who are right now obviously unable to understand what's going on, they should really understand, because most of them entered in the COVID crash, and then after that markets were generally very kind. And I've had the fortune of meeting many on various forums, and it turned out that many thought investing was just a very simple thing. But as it turns out, this is a tricky exam where some of the easier questions come first, and you think it's very easy, and then somewhere in the middle you start to get more and more trickier questions, and towards the end the really tricky questions are there. And this is really where we are right now. I mean, take it as an exam.
Mr. Sharma, there are some out of syllabus questions here in this exam paper. Look at the kind of geopolitical tensions that we've come across. We were not prepared for this, and the kind of inflation that is getting stoked because of that too. So how are you looking at some of the unprepared things that are coming into the markets?
So welcome to the market. I mean, there is no syllabus here. We do know broadly the syllabus that there will be inflation is a permanent, at least, threat to the markets. Oil price is a threat to markets. A war is a threat to markets. So if you look at it on a very large, high level thinking, so these things keep happening. Yeah, it's not happened for the first time. So the point is that all things are temporary, ultimately. Nothing is permanent in terms of the bad part of all of this, okay? The world generally works well. There are times when it does not work well, and this is one of the times it's not working well. But if you look at a high-level view, the world has some logic, some order, some system to it. The world doesn't stop functioning, okay? It appears it's the end of the world, but it never is. Life goes on. So this will also pass. The smarter people will survive this well without panicking and without really, having bought a lot of junk stocks. As long as you've broadly been okay, some good stocks will fall too, but you will come out of it much better, much wiser, and the next phase will give you back most of what you lost.
Okay, but what should investors do in this sell-off? Is it a time to stay away, or is there still some opportunity to buy on dip?
There is always opportunity. The point is that you have to become very picky in a market of this kind, wherein the opportunities become relatively narrower. In a bull market, there are wider choices available to investors. In a bear market, there are obviously the choice narrows. But to say there is no choice, that is not correct either.
Right.
But you will need to work harder to make money, to be clear about it.
Absolutely. But where is the hiding place in this current scenario of markets? Is it the large caps? Is it commodities? Where are you looking at this, buying opportunity really?
There are no hiding places in a market meltdown. So to be clear, all of us are losing money. Even I'm losing money. I'm looking at my P&L. It's not making me feel very good. But I mean, the fact of the matter is, this is inevitable that you will lose some money. It is not possible to survive a bear market with actually positive returns unless you were smart enough to buy put options or short the market, which very, very few people are. Otherwise, there is no room to hide. Face the market. Buy stocks. If you want one-line advice, buy stocks that are holding up well in this. So you have to buy strength, don't buy weakness. Most people tend to sell their good stocks and buy stocks which have fallen a lot. That's usually not a wise strategy. So you should buy strength in a bear market. Usually those stocks will bounce back much quicker.
Okay. But since you are a global investor too, I want to understand from you, which are the markets still looking firm at this point in time, more attractive than the others at this point in time? And is India a top, one of those top lists as well?
India is probably the best one right now. In my opinion, India appears the safest market. Not that you will not lose money, but you will lose the least money if,
Mm,
as long as you've broadly done a good job of your portfolio, you will lose the least money in India. If you
mm,
look at the US, which has been a phenomenal market last 7, 8 years,
yeah.
and you look at the carnage there, it is unbelievable where quality stocks like Facebook or an Amazon, they're all down between 30 and 50% in the last 8, 9 months time. I mean, that kind of carnage we have not seen anywhere close to that in the quality end of the market in India.
Mm.
And many new age tech stocks are down 80, 90%, even 95%. So India is still the best place to be in. So in that extent, Indians should be thankful that they are invested in India.
Okay. So between the large, mid, and small caps, where would you really put your bets right now? The mid and small caps have fallen 19%, very, very sharply from their all-time high levels. Is there a scope of investment here?
Oh yeah, I mean, I continue to believe that the mid and the small are the areas where you will make outsized returns. Many companies are doing very well.
Hmm.
But just because companies are doing well doesn't mean the stock prices cannot fall. I mean, the two are not connected every day. They're connected over a longer term, but not every
Hmm.
day do you find logic. So,
Hmm.
so there are great companies out there which have fallen 30, 40%.
Yeah.
If as long as you've done your homework, they're good places to go and start nibbling.
Right. But since you say that, India is perhaps the best placed market to invest in right now, I want to understand then why are FIs really on a selling spree? We've seen them run away like never before, perhaps, in this market.
So to a large extent, it is not an India-specific view. It is an emerging market view.
Hmm.
And when you look at India, we sitting in India or as Indians, we just look at the world from our point of view. But the world is a very large place. India is one of the markets in that. India is just 2.5% of world markets in market cap terms. It's a very
Hmm.
tiny market. When large allocations shift from emerging markets to developed or from equity to debt, there will be outflows in which there will be outflows from China, from Taiwan, from Korea, from Brazil, from Russia, and also from India. So let's not get too fussed about this. These
Hmm.
large portfolio flows don't mean that people don't like India. They don't like emerging markets, and that's the reason for these outflows.
Absolutely. Also, what do you see as the trend going forward, say till FY23 ends? Is it going to be this kind of a down market? Are we only going to see that for some more months and then again a bounce? How are you looking at the market going forward from here?
See, I mean, in this kind of situation, it's very hard to make one-year views. All I can tell you is that you should buy companies and
Hmm.
stay with those as long as the numbers are coming through,
Hmm.
even in a difficult environment.
Yeah.
So market headline index, I mean, that's nobody can predict, and I don't even want to go there because those are very difficult things to get right. And I know I'm not interested in being a index predictor. I'm more interested in talking about companies which will weather this crisis well. And there are many companies, but it requires hard work. It's not going to be easy.
Yeah. I also wanted to ask you about these new age tech companies. When they went public, there was a paradigm shift. Everybody thought that this is the future and these are the new companies that will change the way how we do business, how earnings would be. And only these businesses will perhaps grow in any kind of an uncertain situation since we've seen the pandemic and the kind of growth that these companies have had. Hard questions are being asked on relevance and cash burn and dilution now. How are you looking at these new age tech companies now? I also remember that I think about a day or two ago, you put something on Twitter asking about the pessimism on US stocks too. So help me understand what is your view here.
Okay, so a lot of these companies, if not all of these
Hmm.
companies, have cash flow deficient or downright negative.
Hmm.
Now, all of that works well in a bull market where funding is freely available. But
Hmm.
all of it reverses dramatically in a bear market, which is somewhat of the kind of the market that we are in right now, when funding taps can get turned off, or you will be able to raise money only at very, very depressed valuations. Both of those things are terrible for such companies because if you cannot raise funding, there is a strong likelihood many will go bust. Okay, many will go bust. And it could happen in the listed, can happen in the unlisted also. So let's not rule out bankruptcies in
Yeah.
VC funded startups which don't generate cash. Now, if they start to generate cash, that's another problem. That means that the business is not going to grow, which means the valuations will not sustain, because we were paying 50, 100 times revenues for growth. But if you cut back to conserve cash, that means that multiple has to compress because you're no longer growing. So it's between a rock and a hard place, not a happy place for a lot of these companies.
Yeah. So did you personally also invest in any of these recently listed last 1 or 2 years of IPOs, or maybe perhaps we've seen the biggest IPO LIC also coming in now?
No, I don't invest in IPOs. So I've never found anybody to make money investing in IPOs. So that's not my style of investing anyway.
Right. Now we are also seeing this entire globe working towards like higher interest rate scenario, a paradigm shift again from the last 2 years. Within this sphere also, which are the sectors that do you believe perhaps will be able to perform better in a higher interest rate scenario?
So for one, I mean, the metal space still is okay. I'm not saying they are great, but at least looking at the supply side constraints, which don't seem to be easing, at least that part looks decent. Like I said, any number of small cap companies have decent models which can weather this crisis reasonably well. So as a group, I think small caps are still very, very good. In the large caps, there are very, very few places that you can really make money because a lot of them are well discovered. But within that context, I think Indian IT will still do okay.
Okay.
If the US slows down dramatically, then they will be hurt. But on the other hand, the rupee may well provide some, cushion because the rupee appears weak for sure.
Yeah. Okay. And what about pharma, sir? I mean, like, when COVID happened, everybody was like thinking that, we are going to consume pills and vaccines and vitamins and everything. And that was the story of the time. But, after that, we've seen a very, very sharp underperformance here too in the pharma space. How does one really approach this space then?
Pharma was barring, if you look at the history prior to COVID, it was doing nothing much. The whole pharma story had kind of become very tepid. COVID gave a big shot in the arm to them, to pharma, diagnostic, all the entire ecosystem around medical. But a lot of that, as it turns out, it was fairly temporary. That people obviously are never going to be focused on, taking a lot of pills if they can avoid it. And it's a lot of cost anyway. I think that part of the market is not going to give you outsized returns. A few stocks might, but I don't think in aggregate pharma holds much promise.
Okay. Also wanted to ask you one more time on that small cap and mid cap space, since that is where most of the investors, first time investors, have large investments in. At this point in time, when they have seen, fallen very, very sharply, are there any specific sectors, or would you just say that what you told me that, all those companies which will be able to weather the kind of storm? Is it only that strategy, or is there also some specific, spaces that one can look at?
Small caps don't belong to spaces. Small caps are very hard to put into pigeonholes of sectors because many of them have only one company in a sector or two companies in a sector. So look at them as a very heterogeneous group, not a homogeneous group. There are all kinds of good, bad, ugly companies. Like I said, they cannot be taken as a sector bet. So there are many companies supplying ancillaries to EV companies, to EV manufacturers. I mean, start taking a look at them. Many have corrected. Hopefully, you'll find a few, because EVs are a permanent theme as far as all of us know.
Yeah.
So, you have to pick and choose, but there are plenty of spaces, I can tell you that much.
Okay. What about financials, sir? How are you looking at this space? Banks, financials, is that also something that is on the cards or something that you think positively about despite the kind of underperformance we've seen?
No, I mean, financials are a problematic area, and I have not liked financials for several years, maybe 2 years, 2.5 years. And if you look at all the major financials, they have not done much. In fact, they have underperformed the market quite markedly. I think the best years of outperformance for financials is behind them.
Right. Absolutely. Last question to you, sir. How are you looking to at your personal portfolio at this point in time amid the recent correction? Are you fully invested right now? Are you looking for opportunities? Is there a rejig between equity and debt? How are you looking at it so that a wider audience can understand this?
Yeah, so I mean, I have started to move a bit from fixed income to equities now. I still believe there is pain ahead for equities, but that obviously means that the pain has to be taken advantage of. And I am beginning to sell a bit of fixed income and rotate a bit into equities. But I mean, we have a bit of time. We don't have to rush into any big decisions right now.
Hmm.
Obviously, the ones we own, the ones I own, are getting hit. They will get hit. I mean, that's part and parcel. It doesn't make anybody happy, but we will ride it out.
Okay, understood that. Well, thank you so much, Mr. Sharma, for speaking with us and sharing all the insights about markets. Always a pleasure speaking with you, sir.
If you like the video, do like, comment, share and subscribe.